so we can do some recording just in case I accidentally say something smart today. Um, Happy Friday, guys. We made it. December 15th, end of the week, heading into the weekend. I'm a few minutes early, so I'll kick back and relax for a second. No hurries, no worries, guys. Excuse me. Good morning, Joel. Had a little bit of news this morning. 8:30 a.m. Good morning, Jim. Empire State Manufacturing Index, that was kind of a dud, didn't do much of anything. At 9:15, we're about 15 minutes out. We've got some medium impact news, industrial production. May or may not be a reaction. The reality is I don't know whether there's going to be a reaction to it. So um, I tend to lean towards the side of safety, and I don't throw myself in front of news. 9:45, we've got flash manufacturing PMI and flash services PMI. High impact news could move the market, guys. Write a note on a piece of paper. Set an alarm on your phone. Hey Siri, set an alarm for 9:45, right? And that way you know when stuff is happening. Whoops, I accidentally activated my Siri. So every morning, guys, I'm checking news. Every morning I'm making sure that I'm just not getting in the way of it. There's a lot of people with a lot of money that react to the news. I don't have enough money to compete with them. So I choose not to. I just sit on the sidelines and I wait. And then everything that I'm talking about, guys, is coming from the education page. I'm just going to slow roll into it. I know we've got, I'm not sure if we have any new people in here. I love new people, but I like you old people too. Excuse me. Man, I was up at 2:30 this morning. Wide awake. Couldn't sleep. That's not a good time to wake up. Um, Education page, guys. Go into the tutorial section. This is where all the rules come from. This is where you can go back and you can restudy your rules. This is where, as we head into the weekend, this is where you can learn how to do market replay, where you can go through and you can replay every day this week, fixing the mistakes that you made. And guys, there's this amazing thing with market replay where you can turn the market on and you can watch it and it looks just like it's live and you've got your simulator and everything is good. But when you get to what you think is a potential trade, you can pause. You can literally pause and look at your checklist and ask yourself, is this really a trade? Is this really my best look? And guys, I think that's one thing that people don't do on market replay the way they should. If you're on market replay this weekend, every time you want to pull the trigger, hit pause. And what you'll find is that if you take a second to think it through, a lot of times you're not actually following your rules. And when you are following your rules, you're like, yeah, that's great, that's perfect. But market replay, guys, this is the tool that you guys should be using after class. This is a tool you should be using on the weekends because it allows you to go back and see what the potential is when you follow your rules. And I think that's one of the biggest things is people get on market replay. It's not about how much money you can make. It's about how much money you can make following the rules. And that pause button allows you to do that. So guys, this weekend, do a little market replay. But use it the way it's supposed to be. Stop boosting your ego with memorizing what the market did. Oh, I remember I went down here. I'm just going to jump in so I look rich on the simulator. Go in there and really focus on following your rules. And the rules are what we're going to talk about for the first hour, guys. The rules are going to be the rules for a high probability trend trade. A trade when each indicator on every chart agrees for the trade, guys. This is the foundation for you. This is what you should be doing before you do anything else. Because this high probability trend trade is going to teach you to read your indicators. Let's just watch the market in the background, right? And when you can read your indicators, you're going to understand some really key concepts, guys. You're going to understand where the market is likely to continue. And you're going to be able to pinpoint that and use it for entries, for high probability trend trades. You're going to understand where the market is likely to go based on momentum, based on direction. And then you're going to also understand where the market is likely to stop. And we're kind of seeing examples of all three of these. on the S&P right now. With all of this momentum, we knew that it was likely to continue on one of these tails, a little pullback. With all of this momentum, we knew that it was likely to continue down. With all of this momentum, even though it hit these one-to-ones, we knew where it was likely to stop. None of the triggers broke through. And guys, this is going to be what we talk about today. We're going to talk about these three simple concepts. We're going to talk about where the market is likely to go, where it's likely to stop, and we're going to talk about where it's likely to continue, and that's going to be your entry. And we're going to do it with only three rules. We're going to keep it simple today. I want you guys to allow it to be easy, and even more so, I want you to allow yourself to be new. I want you to remind yourself that you are in a study process. Remind yourself that this isn't what you've been doing for the last 20 years. You're not the CEO of the trading enterprise that you're trying to do here. You are a student. You're learning. Allow yourself to make mistakes, guys. It's such an important part. The three rules that we talk about each provide an advantage. This high probability trend trade is the one that's going to teach you to read your charts. It's going to teach you to understand those continuations, those stop points. And each rule for the high probability trend trade gives you an advantage. If you begin the process as soon as possible, when you look at your charts, speak to yourself in terms of advantages. Right now, I have the advantage of momentum. I know that because of the trigger look, and we're going to talk about that. And right now, I don't have the advantage of a clear path because my triggers haven't broken through these key Fibonacci areas. So I'm talking to myself in terms of these advantages, and only when I allow myself to believe, I guess, or to trust that these advantages create an advantage for my trading, I pull the trigger when they're present, guys. So these three rules. Rule number one gives you the advantage of momentum. Rule number two gives you the advantage of a clear path, absolutely nothing in the way. And rule number three gives you an entry area. It uses a smaller chart. It's a two-chart process. A lot of people want to use more. More is better. More is better. Guys, more is not better. Better is better. And you can get everything you need from two charts. Your large chart is a broad stroke of a brush. Your large chart is a slower moving chart. And it's really just the most current bar on the large chart that's going to give you the information that you need. The large chart's going to define direction. The large chart's going to define momentum. And the large chart's going to define areas, guys. And all of this information from the most current bar, it's a slower moving chart. It doesn't show change very fast, but it shows the overall temperature of the market. Your first two rules, the ones that provide you momentum and a clear path, must be met on the large chart before you ever turn your attention to a small chart. Notice that I don't get into the numbers, the sizes, the bar structures. It doesn't matter. Big chart, little chart, guys. Your little chart is your entry chart. Your small chart is going to refine the broad stroke of a brush. What happens in one bar on your large chart is going to happen in 15 to 30 bars on a smaller, faster chart. And you're literally going to be able to pinpoint where the market is most likely to continue. And you're going to use that for your entries. And by doing so, it's going to allow you to reduce your risk and increase your profit potential. And rule number three is your entry rule. It's the one that gets you in at the absolute best of the best spot. So we're going to use these two charts. And here's your visual of why. The large chart is the large crowd, guys. It's what the people with the most money are making happen. The people that are putting the most effort into their trades, guys, they're making it go up or down. They're making it with or without momentum. They're reacting to these key areas that you're going to recognize. And the large crowd tends to win. It doesn't always, but more often than not, the large crowd wins. So if you're never fighting the trend or momentum, guys, it's a huge advantage for you. The small crowd is who we rely on to get us to that best of the best entry. The small crowd is going to fight the large crowd. And typically their fight is squashed relatively quickly. You're going to be able to pinpoint exactly where their fight is most likely to be squashed. And that becomes your entry area. That is your absolute best of the best spot at areas inside of favorable large triggers. So we're going to talk about these three rules, guys. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. The easiest way to do it is to give yourself two options when it's time to get in the market. Rules met, rules not met. That's it. If your rules are met, get into the market no matter what your gut tells you, because your rules have been proven to provide a statistical advantage. If your rules are not met, just sit on your hands and do nothing. Go get a cheeseburger. Because without your rules being met, the statistical advantage goes away, guys, and it really can be that focused and that simple. While while we're talking in class, while you're watching the market, guys, simulate, practice over and over. Simulate your trades. Post them in the room. Every time you post in the room, it's a private session for you. Every time you post in the room, we're going to talk about what you posted. So what I need from you, since we use two charts, is I want you to show me a picture of both charts. I want you to show me the broad stroke, and I want you to show me the entry chart. I want you to tell me why you did what you did. And there are no wrong answers. Can't stress this enough. You can't say, well, Mark, I thought it was going up, so I took a long. Well, that's exactly correct for you. That's exactly what you did, and I need to know where your line of thinking was. Because if there was a challenge, maybe you were trading into areas, or maybe you didn't have the right level of momentum, well, then we can look at it, we can talk about it, and hopefully we can eliminate some of the challenges that you're having, and really kind of expand on the advantages that you're taking. Show me where you entered. Maybe we can work together to find a better entry, or maybe you're doing it so well that all I need to do is say, hey, great job. Way to get into the market at the right spot. And then tell me where you got out. Because our first hour focuses a lot on entries. Our first hour is designed to get you into the market where the market is most likely to continue. But your exit is kind of the second part of the equation, guys. We can work on better exits. We can work on bigger holds, getting more out of the market. So simulate, post them in the room, concentrate on practicing the correct trades. At least let that be your goal. And then we're going to simplify today. We're going to talk about that 3-rule trade, that high probability trend trade, the trade that typically wins 70 to 80% of the time when you follow the rules. We're also going to talk about what's called a medium probability trade. And when we have a medium probability trade, you're going to forfeit one of these advantages. Medium probability trades, most of your indicators line up for the trade. However, an issue exists. An issue is singular, guys. Don't stack issues against yourself. The likelihood of success goes down. And medium probability trades have to be managed assertively. Your ability to read the charts, the skills that you develop with a high probability trend trade are going to have you reading your indicators. They're going to have you recognizing problems. They're going to allow you to manage assertively. So focus on the easy first before you try to compound and add. But I'm going to give you 2 trades today. I'm going to give you a high probability to focus on for your first couple weeks, and I'm going to give you a medium probability trade to practice as well. You need to figure out what looks you're going to commit to. What does it look like to get into the market? Nexgen has provided you a spreadsheet, guys, and there's a whole section on the favorite looks. There's a section with client trades. These are the looks that should get you into the market. Your favorite looks are you building a plan. This is one we did in class yesterday. This is the best of the best. It had every advantage. It had the perfect entry, and it's in the spreadsheet because this is the look that I never want to miss. This is the look that I'm committed to. Every time it happens, I'm going to pull the trigger because I know there's a statistical advantage. The client trades are just really what I've taken from you guys in class. There's about 270 pictures of you guys using these indicators, taking advantage of the opportunities. There's a little bit on NASDAQ. There's a lot on management, patterns that repeat themselves over and over, because that's really what it is, guys. I teach patterns. I'm not necessarily teaching the NASDAQ. I'm not teaching crude oil. I'm not teaching the S&P. I'm teaching patterns that repeat themselves on every market, so that you can use it on any market that you want to trade. And then to get to where you want to be, can't stress this enough, to get to where you want to be, post in the room, guys. Post in the room. This is going to get you there quicker than anyone else is going to get there. The person that posts the most typically learns the most. They learn it the fastest. They begin to execute properly the quickest. The more you post in the room, win, lose, or draw, guys, the idea is to get feedback on everything that you do. Even if you're not trading, if you open up a chart and you're looking at it and you say to yourself, man, he said something about termination conditions. I think this is one. Let me take a picture of it. Let me drop it in the room and let me ask him, hey, Mark, am I reading this right? Is that a termination condition? And when we reach resistance here and none of the triggers broke, That's a termination condition too, right? This is a great opportunity for me to sit on my hands and do nothing. And then that conversation will go back to exactly the question that you asked. We'll talk about the termination conditions. We'll look at the rules for the termination conditions. We'll make sure that you understand exactly what you're looking for when you reach an area that may stop the market. And then the second thing is use that spreadsheet, that one that I just showed you. And the most important page, guys, is the first page. Every time you pull the trigger, it goes into your trade journal. That's the first tab. I'll drop mine in the room for you so you don't have to go searching for it. But if you want a fresh copy, it's in the Nexgen Study Picks folder. What you're going to do is you're going to drop your trades in here every time. You're going to put a picture of them so that you can go back and study the picture. You're going to talk about the advantages, whether they were present or whether they were not. You're going to talk about whether you won or whether you lost. And the most important thing, in my opinion, that you can do is in the notes section, after you post that trade in the room, if you get some feedback that's contrary to what you thought was going on, that's a great opportunity to put it in the notes section, because what you're going to do is you're going to study these trades every morning. Whatever you did yesterday, you're going to look at today. And you're going to ask yourself, what worked? Because what worked is what you should be doing all the time. Those are the pictures you should be taking and dropping into that spreadsheet. What didn't work? Did you break rules? Did it affect your ability to make money? What felt easy? People always tell me that when they're following the rules, they feel confident, they're focused, everything is good. And what feels forced is typically when you know you're losing those advantages, when you know that you're bending the rules or breaking the rules, and you go from trading this confidence of knowing that there's a statistical advantage to the nervousness of hoping that things work out despite your inability to follow rules, guys. And this little brief historical each and every morning, I'm telling you, it takes a third of a cup of coffee to get through yesterday's trades, but it's going to set you up for the day. It's going to have you focused on what works. It's going to have you trying to avoid what hasn't been working, and it will accelerate the learning process very much. So we're going to do this now, guys. We're going to learn the rules. You guys simulate all day long. Pull the trigger. And every time you do, Dwight will use you for an example. Drop it in the room. Tell me what you were looking for. And Dwight, you didn't tell me anything that you were looking for. You didn't tell me why you did what you did. You just said enter to tick above the midband, right? Because the triggers were strong and you had a clear path. There it is. 50-50, no divergence, super strong. Pull back, bingo, bango. I love it, Dwight. That's what we do, right? Let those areas clear a little bit, and with that much momentum, everything is easier. And that's stress-free trading, guys. That's the one. Dwight's going to say, with no divergence and strong triggers and everything says up, I'm just going to go up. I'm going to go with the flow. I'm going to make it easy. And then Dwight's going to drop that one into a spreadsheet, and he's going to put it in his favorite looks. He's going to say, I'm going to do this every time it sets up, because this one's making me money. And that's how the feedback works, guys. So let's go to the rules. 3 rules. And everything starts on the large chart, guys. Everything begins on that big chart, that slow chart, that broad stroke of a brush. And the first advantage that you're really going to get is just understanding which direction you should be trading. If the large chart is green, if the background on the large chart is green, behind the most current bar, guys, you're only looking for rules to be met for trades up. You're only looking to go with the flow, with the trend. If the background is red, you're only looking for rules to be met for high probability trade short. Guys, that's really the easiest way to do it. Everything says up, go up. Everything says down, go down. There's no reason to fight. And what you'll find is if you never fight, it eliminates an awful lot of mistakes. But rule number 1 tells me that I must have strong trigger lines. So strong trigger lines happen on the large chart. Strong trigger lines, the colors of your trigger lines will match the colors of the background. And that's pretty simple, right? If the background is green, your trigger line should be green. Everything should match. Everything should agree. Because when it agrees, things become obvious. Strong triggers means that your small triggers, these solid lines, break above the large triggers, the dashed lines. There's space between the two, guys. There is a gap between small and large. This is the strong trigger look. And when you have a strong trigger look, the odds are favorable for the market to continue up. Odds favorable momentum is what you're going to hear in the classroom all day long, guys. Odds favorable momentum is the most favorable look to buy Fibonacci support on that smaller, faster chart. That little small crowd push looks like a tail on a large chart. It's just a 1-bar event. But on that smaller refinement chart, you'll literally be able to pinpoint exactly where that tail is likely to form. In a downtrend, your small triggers break below the large triggers. Everything is the same color. Everything is wide and angled in the direction of the trend. The space between the two lets you know that the odds are favorable for the market to continue down. And if this is a strong trigger look, well, then this is a weak trigger look when those small triggers work their way back inside of the large. Let it be black and white initially, guys. It's either strong or it's not, right? Don't work in shades of maybe. I either have separation or I do not. I have the advantage of momentum or I have weakness, which means anything can happen up or down. And if you train yourself to wait for the advantages, there's a couple things that you're going to learn. The first thing you're going to learn is that 90% of your day is spent sitting on your hands waiting for advantages to materialize. But once they do, strong trigger lines typically push the market down. Right until they weaken, this usually coincides with hitting Fibonacci support or resistance, and there comes a reversal off of those anything can happen triggers, which creates odds favorable momentum. Once again, strong trigger lines, there's your tail. You guys are pinpointing this entry. You're carrying the momentum up to your targets, and then they weaken again and it reverses. And from the reversal, maybe off a key area, momentum, tail, profits. That's the goal. And then the sit on your hands point, guys. When small and large don't agree, maybe one is red, the other is green. When small and large don't agree with the background, maybe the background is green and your triggers are red. This is a transition period. This is when the people that move the market are fighting. Buyers and sellers are fighting. Buyers and sellers are playing golden gloves and schoolyard bully, whatever you want to call it. But they're going after each other, and neither can really grab a foothold. Neither of them can really reign supreme. And this is where a lot of people try to predict what the market's going to do. This is where a lot of people are like, the background's green, I'm going to try long. And then they get run over. Well, my triggers are red, even though the trend is up. I'm going to try and go short. And sure enough, they get run over. And a lot of fortunes are lost in this area, but you guys never have to do it. You guys never have to lose money with wonky triggers again, because rule number one keeps you focused on waiting for one side to win and providing you odds favorable momentum. So, guys, that's rule number one. If you're relatively new or you just like to humor me, give me a Y in the room. Let me know that you're okay with this look. Small above the large are wide, they're angled in the direction of the trend, just like Dwight showed us. Guys, that is odds favorable momentum, and it really does create pretty easy winners. Odds favorable momentum, and the market's continuing up. Odds favorable momentum, and that market pushed down all the way to the key area. It's insane just how often it happens. Odds favorable all the way to a key area. Odds favorable all the way to a key area. Look at the bounces. We're about to learn how to recognize when those bounces are most likely to happen. And then once again, odds favorable momentum in this market just keeps screaming right off of a key area. That trade happened yesterday after class. It's a good looking trade. So guys, odds favorable momentum leads the way. Odds favorable momentum will carry the market in the direction of the trend. Odds favorable momentum will break areas. Odds favorable momentum is going to set you up for success because it's hard to stop a Mack truck doing 150 miles an hour down the road. But once you have that odds favorable momentum, you got to make sure you're not going to drive into a brick wall. Those are those likely to stop areas, termination conditions. Rule number 2 says termination conditions must be false. Termination conditions are where decisions are made. Termination conditions are where the people who move the market, the people that are in charge, the people that are not you and me, these are the people that they react to red Fibonacci resistance, to blue Fibonacci support. They react to yellow 1-to-1s, to divergence high lines, to divergence low lines. And this is where buyers buy and sellers sell. These are where profits are taken. These are where we. Good morning, Jose. We don't ever have to get caught up in the middle of their decision making process. And we're going to do it with a simple recipe to recognize whether or not an area is likely to stop the market, like it did here, or whether or not an area has the potential to break, like it did here. And we're going to do it. It's a simple recipe, guys. And I'm going to go to the user guide and I am going to go to tops and bottoms. This is your weekend homework if you're new. I want you to watch the video from the tops and bottoms section. It's my brother being pretty smart for about 45 minutes. But let's make it as easy as we possibly can. For the new user, there are two possibilities. There is a clear path and there is no clear path. And the recipe is very simple. If price, these dynamic Renko bars, come all the way down and reach an area, whether it is Fibonacci support or even if they trade up into Fibonacci resistance, if price reaches an area and none of the triggers break, you've reached an area that may stop the market. You've reached an area that may create a bounce. You've reached an area that may liberate you from your money because it might create a bounce or a fight or a reversal. And when price reaches one of these key areas and the triggers remain above, that's your key, no more short trades. Look at the bounce it created in the S&P. So that's the first half. If price reaches an area and absolutely no triggers break through, sit on your hands and do nothing, guys. You don't know what the market's going to do. So if this is the absence of a clear path, no clear path, no trade, we have a clear path when both the small triggers and the large triggers get to the other side of an area. So in this case, and I kind of like doing these, price reached support, none of the triggers broke. There's a big red stop sign there. Don't go short. You don't know if it's going to break, if it's going to hold. You don't know if it's going to bounce and fight. So just do nothing for a minute. It's okay. Take a deep breath. And then when both the small and the large get to the other side, well, now it's time to look for the trade. Now it's time to look for that odds favorable momentum. Now it's time to make sure that we haven't reached the next area. And sure enough, we did have odds favorable momentum, and we also had a clear path because we hadn't reached Fibonacci support yet, which means that tail becomes one of those entries that you guys are going to learn to pinpoint. Odds favorable, clear path. You're going to enter at resistance that was once support because support broke, and you're going to be able to ride that momentum all the way down to the next key area, guys. And this is kind of what we're looking at right now. Embracing the simple recipe, making sure that we either have a clear path or we don't. Price comes down, price goes up. We call that a pivot. That's all it is. It's just a pivot. Market goes up and down all day long. Pivots happen all day long. If there's a loss of momentum at a pivot, you're going to see a cyan line from a low, or you're going to see a magenta line from a high. And all it means is that momentum's not following price, guys. This cyan line is not a termination condition because the first part of the recipe is that price must reach it. Here, price creates it. The market bounces. And then it comes back and it reaches that divergence low. So we've satisfied the first part of the recipe. Price reaches the area. We ask ourselves, where are the trigger lines? Well, they all remain above. Until the trigger lines get to the other side of this divergence low, it is a termination condition. No more short trades into it. This particular termination condition is called a pivot stop out of a prior divergence low. Pivot stop outs are just this crafty way where the buyers come in, the sellers give them a false sense of security, and then they run them right past. They stop out all the first buyers, and the next wave takes over, guys. These termination conditions are powerful. These termination conditions can reverse the market. They become even more powerful if they coincide with Fibonacci resistance or support. So in this case, you see price trades to resistance. When it gets there, you guys ask yourselves, where are the triggers? They're all below. Therefore, no trades, right? No long trades into a resistance that may stop the market. From resistance, the market bounces all the way back to support. And once again, you're obligated to ask yourself, where are those trigger lines? Well, they all remain above. So I'm not going long into resistance because the triggers have remained below, but I'm also not going short into support because the triggers have remained above. Guys, this is part of that 90% of your day doing absolutely nothing. Ultimately, price comes back up and it reaches Fibonacci resistance, one of those divergence highs, a second set of resistance. All of your trigger lines remain below. Notice there's strength in the triggers as it hits it the first time. There's a lot of weakness as it hits it the second time. You see this a lot. It's just a retesting of areas. This pivot stop out of a divergence high right there with Fibonacci resistance, guys, this is powerful. And look what it does. From this termination, large and small turn red. It provides you odds favorable momentum. You have not reached the key Fibonacci area. Guys, there's your tail. There's a little pullback where hopefully you guys were able to pinpoint an entry, get into the market. This is your highest probability trend trade. When it happens after a termination that creates a full reversal, this is the one that typically wins 70 to 80% of the time. And that termination is going to be called a strong top because it's a no triggers through termination that reverses the market. Is everybody comfortable with the very basic concept on termination conditions? Let it be black and white initially. If price reaches an area and none of the triggers break, sit on your hands and do nothing. It's okay. You don't have to guess. I mean, you can, Mizzy, great question. You can have a pivot stop out. You'll see them all the time, to be honest with you. Let's see if we can find one that didn't use a divergence. Um, Divergence happens a lot with them. And you're more likely to find one with divergence. I'm looking for one here. Let me make that a little bigger. Because I'm sure there is somewhere. But notice how often it tends to happen with divergence. Here's an example of one. But it did have Fibonacci support. So here's your pivot, right? Corresponding with Fibonacci support in a midband. Here's where it stops out, and there happens to be a level support right there. So termination conditions are true, and the pivot stop out becomes a little less relevant. And the reason that I say that, and I want to show you this picture that I made a while back for somebody on termination conditions. When we talk about those divergence highs and lows, they're actually kind of the most forgotten potential termination condition. This is one of the most ignored. Um, but anytime the market has that divergence lower high, that represents a very specific point in the market where the in control force not only lost out. So, for example, the sellers were selling, right? And then the buyers robbed them of momentum. So it creates a very definitive line in the sand. And that line in the sand, it's very regular and common for perhaps the sellers to come back and try to retest it to exceed it. But that is where the same forces that stole the momentum are typically waiting to take over to stop them in their tracks. So while you can have pivot stop outs without the divergence, that divergence is a very significant representation of where the sellers stole momentum from the buyers. And when the buyers reach that line in the sand, it's not uncommon to see the sellers unload on them again, and vice versa. Does that make sense? So while there can be, they're certainly more powerful with that loss of momentum at the key area and then the revisiting of it. I hope that helped. And then here's your recipe for simple success, guys. No triggers through, the area is not broken, not a clear path. Rule number two is not met. Do nothing. Small and large break through the area. The path is now clear. As long as you haven't reached the next key area, look for your rules to be met. Um, and then, of course, the question, what if you insisted on a clear path? Would it make your trading more profitable? If you were in this room yesterday, you realize that absolutely a clear path tends to yield results because we saw a lot of success with it and we saw a lot of not so much success without the clear path. But we talked about a medium probability scenario, guys, where one of the advantages goes away. I'm going to show you your first medium probability trade or what it looks like setting up. Um, this center picture where your small triggers have broken above that Fibonacci resistance, but your large triggers remain below. The key to this look is that you have odds favorable momentum. Odds favorable momentum can break areas. It's not guaranteed to break areas, there's no promises, but it creates that potential for this key Fibonacci resistance to break. 50% of your trigger lines have made it through, 50% have not. We call this a 50-50 look. And there's still opportunities for trading with a 50-50 look. There's still opportunities to get into that long position. But because the area isn't broken yet, the path isn't clear. And if the path isn't clear, it's only a medium probability scenario. You're not going to find that 70 to 80% win rate. I'm going to give you a plan that allows you to take these 50-50 trades with the highest chance of success. But this will be your first trade outside of the medium probability trade. So it's imperative that you understand momentum. It's imperative that you understand that you're up against an area that only has the potential to break. And this will be the next step, the next piece of the puzzle as you grow with the software. When you take a medium probability trade, your chart reading recognizes the problem. Your chart reading is going to allow you to manage it a little more aggressively than you would a high probability trend trade. Medium probability trades very often are not home run trades. They are quick base hits. Let's get some money in the bank. Let's get out of trouble. Let's get to zero loss. And if it breaks, cool. And if it doesn't, I'm not going to leave all my money on the table. Um, so that is the main recipe. A pivot forms, divergence is there, not a termination. When price reaches the divergence high, now it's a termination because the triggers remain below. The recipe never changes, guys. At highs, price reaches an area, triggers remain below, sit on your hands. At lows, price reaches an area, triggers remain above, sit on your hands. That is using lines on the large chart to determine whether or not you have a termination, whether or not you have a clear path. Um, I'm going to show you one more picture about termination conditions. And this is really for you newer people. Most of you have seen this 1,000 times, but I think that this is probably one of my favorite pictures because it reminds you just how patient you need to be. It reminds you just how impressive these areas can hold. Um, Even with odds favorable momentum, you guys paused when we reached Fibonacci support, but because of the momentum, support ultimately breaks, and you can see how it goes through and it begins to behave as resistance. And then it reaches those one-to-ones, the same thing that we saw in the S&P this morning. I want you to look at this picture right here, and I want you to look at that. Isn't that amazing? It's the exact same thing. Patterns repeat themselves all day long. Um, but in this picture, price reaches resistance or support. None of the triggers break. You guys know to sit on your hands and do nothing. And then the bounce happens, and it gets right to resistance, and all the trigger lines remain below. So you can't go long into an area that may stop the market. You can't go short into an area that may stop the market. And then this key area, the market ricochets in between the two. There's no reason for you guys to ever get caught in this, ever, ever, ever. But eventually, when small and large get to the other side of resistance, it starts to act as support. You couple that with some momentum, guys, there's your highest probability trend trade. It's what you do when there's nothing to do that's going to help pay dividends when you take those trades. When you enter those high probability trend trades from a termination condition that created a full reversal. This is your first trade, guys. This is the best of the best. This is what we're looking for. And that's using lines on a large chart. Those are the decision-making points. And look what happened. The decision was that the buyers would take over right to the potential to break, right? The area never broke here. And it just never did. And it never really gave you much of an opportunity. And then it just rifled down to the downside. The people that want to move the market are going to do exactly what they want. You can use trigger line position versus areas to help you determine whether or not it's likely to break or likely to hold. And then once you do that, we'll start to look for opportunities when the path is clear. And then there's one more termination condition that doesn't use the large chart, that really doesn't even use lines. It's going to happen on your smaller, faster chart, and it's going to let you on that smaller chart see change that you won't recognize on the large chart because it's such a slow moving chart. And this final termination is the only termination condition that I respect on a small chart. Um, this final termination condition on a small chart is going to also help you manage trades that you're in. Whether you're in a short or a long, if you see this happening on a small chart, it's going to give you the heads up that maybe it's time to manage. And what it is three divergences in the same price range. Three losses of momentum in the same price range may terminate the trend. Notice the keyword may. It's not guaranteed, it never is. But this is a pattern that repeats itself enough that it's worked its way into the termination conditions section, so there's probably something to it. Three divergences in the same price range may terminate the trend, and it becomes more powerful when the small triggers work their way inside of the large triggers. When you get those anything can happen triggers. And it becomes more powerful still when the third divergence is higher than the previous from a low or lower than the previous from a high. And this creates a head and shoulders pattern, guys. So three on itself may terminate the trend. It's a great red flag, no more short trades. Or if you're in a short trade, manage. Three divergences with weak triggers is saying, seriously, I'm trying to tell you, here it is a little stronger. And then that higher pivot or lower pivot is like, come on, seriously, let's get out of this trade. Um, you're going to see this look at a low, you're going to see that look at a high, times when maybe the market has a clear path. And it seems to turn from nowhere. Maybe you have odds favorable and a clear path, and it just doesn't finish the move. These divergences will help you recognize that, guys. So that's rule number two. Rule number two, make sure that you're not trading into areas that may bounce. Rule number two keeps you from getting caught in the decision-making process of the people that control the market. Rule number one gives you the momentum to carry you to the next key areas. It gives you the momentum to break those areas when the conditions are right. So when the rules are met on the large chart, when the large crowd has done their thing, we're going to let the small crowd fight, guys. We're going to let them fight, and hopefully they're going to push us to our perfect entry. And rule number three says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So we're going to use a limit order, meaning that we're literally going to wait for the market. We are going to just sit there and it's going to come to us. And it's kind of cool that we can do that. And we are going to make sure that it comes to us at an area. And the areas that we're looking for are going to be Fibonacci support or resistance, mid bands, yellow 1-to-1s. But the magic happens when they are nestled inside of favorable large triggers. And favorable large triggers is a pretty easy concept. On your small chart, you have what is essentially two sets of large triggers. One is native to the 5-1. It's the smoother of the two. One looks like it has steps. That is just the large trigger from your large chart. It's been kind of synthetically transposed on there so that you can see that. And when these two triggers, large and synthetic, are on top of one another, like two snakes riding piggyback, when they are wide in the direction of the trend, guys, we call this favorable large triggers. And it's favorable because when an area resides within them, this becomes the point of continuation. This is where the market is most likely to continue. And the tighter they are, one on top of the other, the least amount of risk you can have going into a trade. So if they begin to splay, to spread, your risk is going to grow. But when they're one right on top of the other, your risk is its absolute least. And I'm telling you right now that managing your risk before you ever manage your profit is one of the amazing things that we're able to do with the software. So we're going to look at an entry. Large crowd says the momentum is strong. Large crowd says there's nothing in the way. Let's let the small crowd fight and let's pinpoint an entry. So large chart leads the way, guys. Everything is down, everything is strong, the path is clear, and you make the decision, man, I need to find an entry. I need to find an area inside of favorable large triggers, but I need the small crowd to do their thing. So You're going to patiently wait when the rules are met for a reversal bar. And at the time of the reversal bar, you are going to identify your trigger lines. And they go from the lowest line to the highest line. It doesn't matter if it's large or synthetic. Um, the bigger the space between the lowest line and the largest line, the more potential for a bounce area that you have. So we're going to identify these, and then we're going to look inside. And we're going to say, what are my areas inside of those favorable large triggers? And in this particular case, you have Fibonacci resistance, and a midband. And they are all inside of favorable large triggers. From your lowest point of resistance, the area, fibs, midbands, yellow 1-to-1s, um, to the highest point of resistance, yellow 1-to-1s, resistance, midband, here they are right here, this becomes your window of opportunity. This becomes the area where the market is most likely to bounce. This is where we are entering the trade, guys. This is where the market's telling us that we need to activate a limit order just below that window of opportunity, a tick or two south of the lowest point of resistance. Because remember, the large chart has odds favorable momentum. The large chart has a clear path. There's absolutely nothing in the way to create a bounce. This is nothing more than a group of people trying to fight everything that the large crowd says. Activate your limit order, a tick or two below resistance, or in a long trade, a tick or two above support, and hold tight, pray, do whatever it is you need to do, but you've done all you can do. And if that market pulls back to your area or to your limit order, just below the lowest area, inside of favorable large triggers, you're in a trade. You're in a trade with odds favorable momentum because of the strong triggers. You're in a trade with a clear path because the trigger lines have broken the previous area and haven't reached the next. And you are in a trade from the area where the market is most likely to continue. And guys, that is your best of the best. That is your trade. Is news a dud? Let's see if the NASDAQ spiked. Not so much. But look at that, guys. Price reaches Fibonacci resistance and bounces. Rule number 2 says no. 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 Guys, it keeps you out of all this indecision. And then this area had the potential to break, but it never did. Multiple divergences let you know that it's likely to push down, and sure enough, down it goes. Kind of cool, right? You guys just have to learn the patterns. Once you do, life gets pretty easy. Then it's just a matter of just sitting and waiting. And let's look at it the other direction. And I'm going to scroll ahead a little bit, and we'll go to this picture, and we'll kind of do it all in one little flail swoop. Large chart setup, right? We had odds favorable, momentum, the background was green. Large chart said that there was absolutely nothing in the way, so we turn our attention to the small chart. Wait for a reversal bar. Let the small crowd start fighting. At the time of the reversal bar, from the top line of the triggers to the bottom line of the triggers, and then we refine that even further from the highest point of support to the lowest point of support, and the white box represents where the market is most likely to continue, guys. Your job is to activate a limit order right at the top of that window and simply wait. And if the market comes back to you, you're in a trade. And if the market pushes a little bit beyond your entry point, you're still in a trade because you're still in the window. And if it pushes lower and lower, as long as you're in the window, your job is to not panic. But the cool thing is we know where the market shouldn't go. If it goes beyond that window of opportunity, typically I give myself 4 or 5 ticks. If it goes beyond the window of opportunity, well, I don't want to be in that trade anymore. I've lost my advantage. And it hits my stop, guys, and I take a loser. And I'm okay taking losers as long as the rules were met. As long as I had the advantage of momentum, a clear path, and an entry area, I'm okay. I'll take that loser because 20 to 30% losers is an absolute must on anything that wins 70 to 80% of the time. But the key, guys, for your first 20 days, for your first couple weeks with me, I want you to do me a favor. I don't want you worried about anything else other than pulling the trigger at the top of that window, at the bottom of the window, getting in at the absolute best spot because it creates a manageable trade. And this is the trade that's teaching you to read your indicators, and this is the trade that you're developing trust in because 70 to 80% of the time, when you follow the rules, and I'm going to give you a checklist, when you have a termination that creates a full reversal, when the market gives you odds favorable momentum and a clear path, and you wait patiently for the pullback to the area inside of favorable large triggers, 70 to 80% of the time, this can be your result. Profit target reached. Guys, this is your focus. This is the best of the best, and this is what's going to give you confidence through the memory of success. We can use those tails on a large chart for historical study, and this is great to do at the end of the day to make sure that you didn't miss any trades. This is great to do over the weekend just to get recognition to go take some pictures. But when your large chart has odds favorable, when your large chart has a clear path, circle a tail if you see it. And if that tail lines up with support or resistance inside of favorable large triggers, guys, congratulations. You have a high probability trend trade. You have a trade that typically wins more than it loses. Take that picture, drop it into your spreadsheet, commit it to memory, learn the looks so that it becomes easy. So you can go back. This is a pretty good example. The market reverses off resistance, odds favorable. Even though the path wasn't as clear as we would hope, it still pulls back to resistance right inside of favorable large triggers. Let's see if there's another example. Sometimes the NASDAQ is super smooth and sometimes it's a little crazy. Everything says up. It's coming off of a termination condition. The market has the potential to break. What does that circle look like if I go back to it? Man, that moved. It pulled right back to support inside of favorable large triggers. So there it is again, guys. Go back and just start circling tails when there's odds favorable. You can work through whether or not there was a termination, but look at just how many times that market pulls back to an area inside of favorable large triggers. This is the pattern that you're committing to memory. This is the pattern that's going to give you success. This is the pattern. When areas break, support begins to behave as resistance. I want you to see this, guys. This is textbook. The market pulls back to the area that used to be support because all the triggers are below, the momentum is strong, and it is the perfect high probability trend trade to get you to the next area. Is everybody cool with what we're looking at, guys? This is it, first hour. High probability trend trades. Your job this weekend is to scroll back and circle tails. Your job this weekend is to see how many times the market pushed in the direction of the trend when the triggers were strong, and how it gets these little pullbacks or reversals when the triggers fizzle out, guys. Straight to support, absolutely no triggers break. Straight to resistance, absolutely no triggers break. Do you suppose there's a little indecision in the market right now? Can you see it? Support, actually resistance to support to resistance to support to resistance, support, resistance, support, resistance, support, opportunity to get paid, resistance, support, just waiting for the opportunities to get paid, guys. That's all we're looking for. Money gets made in between areas. Money rarely gets made right at the areas unless you're taking profits. So that's your high probability trend trade. That is using two charts, big chart, little chart, large crowd, small crowd, excuse me. Two charts to recognize three advantages. Two of them happen on the large chart. One of them is just an entry chart. One chart defines direction, momentum, and areas. Another chart refines one bar on the large chart and turns it into 15 to 30 on the small chart. This one bar that told me it was time to look for an entry is all of these bars. The bottom of it is the beginning of my pullback. The top of it, the tail, is the area of resistance inside of favorable large triggers. It's this refinement process that makes it possible for you to have the least amount of risk. It's this refinement process that makes it easier for you to have the absolute highest profit potential. And now the Friday gift giving, guys. Here's your high probability trend trade checklist. Here is the three rules, and a reminder that when it comes from a good top or bottom, a termination that creates a full reversal, it adds to the potential for winners. But you can take a trade without a perfect top or bottom, guys. You can do it. You're going to use those three divergences to manage. You're going to use those divergences on the smaller, faster chart to make sure that things aren't changing on you. But I've never had anybody in the history of the checklist mark yes to all of these truthfully. Let me throw that in there. Mark yes to them truthfully and do worse than 70%. Most people find themselves around 85%. We all say, everybody swears that they're in this to make money. Everybody swears that their goal as a trader is to be financially stable. But what you'll find, and most people find this on their journey, is that the desire to be busy outweighs the desire to be correct a lot. So start from day one of giving yourself two options: rules are met or rules not met. And what you're going to find is that when you follow a plan that's been proven to win more than it loses, when you don't deviate from the plan, it actually becomes easier to win. It becomes less stressful to trade. So take this checklist, print it out, put it on your desktop, police yourself. When you are doing market replay this weekend and you think you have a trade, hit pause and go to the checklist and make sure that you can say yes. And if you can't, don't pull the trigger. It's really that simple. You can show yourself the potential of only taking these trades by pausing, by looking at it, by back testing it, by proving it wrong. Assume that I am just full of beans and crazy, and you're going to prove me wrong by going back historically and showing me that these don't work. Please do it, because you'll be with me forever. I'm also going to give you the high probability trend trade checklist, but we're going to talk about what it looks like visually, because visual representation associated with the words is huge. I can say strong triggers, right? I can say termination that creates a reversal, and that means nothing to a lot of people until they see a termination and what a reversal looks like. I can say strong triggers all day, but this shows you exactly what it looks like. Here is the visual to go with the words. Strong triggers means that the odds are favorable for the market to continue up. Weak triggers means that anything can happen up or down. I know exactly where my advantages lie. I can see them. I can relate them to words. Termination conditions, it's either broken or it's not, or it has the potential to break. High probability trend traders, it's got to be broken with a clear path. There it is, exactly what it looks like, what the recipe is. And then finally, your window of opportunity, guys. And these are in order for a reason. You look for momentum before you look for a clear path, because momentum is so important to getting to where you want to go. Then you look for a clear path, because even with the strongest triggers, if a decision's being made, it's a decision that may affect your trade. So that's why it's number two. But when those are both in play, guys, all you need to do is find that continuation point. That's where the best of the best happens. When you're learning the software, give yourself a break, guys. It's a lot to take in on day one or two. Make sure that you know which way you should be trading. Keep it simple. You're either going up or down. We never go left or right. It's always up or down. Green is up, red is down. If you have a green background, then you're looking for strong triggers to the upside, period. It's that easy. So once you can identify up and down, go to step two. If it's green, this is my look. And if I don't have it, I'm going to sit on my hands and do nothing. If it's red, this is my look. And if I don't have it, I'm going to sit on my hands and do nothing. I'm not going to bother going to the next one. But if I do have it, I have to make sure that I have a clear path. This is the next step, number three. If I have a clear path, well, then I'll look for an entry. If I don't have a clear path, well, then I sit on my hands and I wait and I start over and I keep waiting for the advantages to be there. Guys, keep it in order. Don't let the small chart lead the way. Large chart always tells you what you're doing. But you've got this one for your desktop. You've got this one. Study it every morning. Make sure you know exactly what you're looking for. And now I'm going to give you a plan, guys. I'm going to give you a stepping stone in your learning journey. This is designed to optimize your chances of success in the high probability trend trade. and the 50-50 trade, that medium probability trade that we talked about with the potential to break. Through simulation, class feedback study, continuous practice, guys, you're going to create your own plan. You're going to create a plan that suits your needs. You're going to create a plan that makes you feel good, that suits you. Some people hate shorts. All they see is longs, and that's okay. Their plan is nothing but longs. Some people use momentum without areas inside of favorable large triggers, and that's okay. The software is like an elliptical. Um, it works if you learn how to work it. If you just stand on it and do nothing, you're going to get exactly what you put into it. So the software, we're teaching you to read the indicators. You're going to create your plan, but this is going to keep you on the right side of things until you're able to do that. Your plan comes from your ability to read the indicators. Your plan will happen more rapidly if you ask for feedback on everything that you see and everything that you do. So the simple plan for consistency, guys. Never fight the large chart direction or triggers. Easiest way to keep yourself on the right side of things. Easiest way to eliminate 60 to 70% of the common mistakes that new users make is don't fight triggers. Don't fight direction. If it's green, go up. Don't try to go down, right? If it's red, go down. Don't try to go up. This is the best of the best, guys. This is going to keep you focused on those advantages. And then define your entry. 2 weeks out of your life, 2 weeks getting in at the absolute best of the best spot. That's all I ask for, guys. 2 weeks. It's 10 trading days. That's nothing. The average user will be able to locate and pinpoint the perfect entry within the first week. Some people take a little longer. Some people are even a little quicker. I was a little longer, I'm not going to lie, because I kept trying to find the entry without the advantages. Um, but if you focus on getting into the market at the right spot, if you let it be mechanical, if you let it be very methodical and pragmatic, it eliminates the opinion, it eliminates the hope, the wish, the want, all those things that are pretty detrimental to traders. And then once you get in, that's the first step. You're going to have to do something with that great entry. You're going to have to make some money, know where to put your stops, right? Where your target's going to go. The reality is that the same way your entry is very pragmatic, very methodical. It's everything that's opinionless. It is very much 100% checklist. Let your management be the same way initially, because remember, you're learning to read your indicators. You're learning to read your charts, to take that information, to be able to analyze it and computate super fast, so that you can manage, and you will craft a plan tailored to your personal goals based on your experience reading the indicators, guys. Your management plan is going to change dramatically between day one and day 100, but learn to read your indicators first. Let every part of your management begin with the perfect entry. That's the easiest way to manage risk. Getting in at the area inside of favorable large triggers, trusting the process and the advantages. When you get in at the area, your stop goes where the market shouldn't, outside of the window of opportunity. And at this point, there's nothing for you to do. You're either going to get stopped out. It's a normal part of a positive equity curve. Oh man, I'm sorry, Cav. I hope you get those worked out. If I don't see you, have a great weekend, man. I'll see you next week. Once I'm in, I either get stopped out or I don't, guys. That's it. Those are my only two options. But with all those advantages, they have to come get me where the market shouldn't go. And if the market starts to do what it's supposed to do, if I get a reversal bar in the direction of the trade, I'm going to reduce my risk even further. I am going to put it about 2 ticks above the reversal bar, and I'm just going to sit on my hands and wait. It's either going to get me, and it's going to get me every now and then, and that's cool. It doesn't hurt my feelings. I got to lose a few, guys, because I'm doing 70 to 80. So 20 to 30 doesn't make me sweat. I never just get to pick which one it's going to be, so I just sit tight. And it's either going to hit my stop or it's going to go to my first target. Those are my only two options, once again. And then if it hits my first target, NinjaTrader is going to tell me, hey, Mark, good job. You just got paid. You are profitable. You are great at this. Way to take advantages and turn it into money. And I'm going to feel good about myself, and my palms are going to stop sweating. And then I'm going to go break even. Because not only did I get paid, I don't want any risk on this trade. Not because this is the best stop. I promise you, this is not the best stop. But new users forget that the large chart gets them in, that the large chart gives them momentum and a clear path. And new users tend to get caught up on fluctuations on the small chart. Little blips, little ticks create absolute terror in new users. So I'm going to go break even and I'm not going to worry about it. It's either going to hit my second target or it's not, guys. I'm only trading 2 contracts. And I either get stopped out break even, which I'm going to tell you doesn't really sting a whole lot after you make $100, or I'm going to let the large chart do its thing and it's going to hit my second target, guys. And that's $300 in the bank, typically in a matter of seconds, because of the momentum, because of the clear path, because of using the bounce point inside of favorable large triggers. Guys, this is your high probability trend trade. This is what we're looking for each and every day. Your management plan with the same pictures is right in your KISS plan. Your entry is right in your KISS plan. Guys, your first couple weeks with me, that should be it right there. That's all you need. Put it on a separate piece of paper. Write it out. Put it on your desktop. This is your beginning plan. Your second trade, when you get comfortable with entries, guys, and it's so important that you're good with momentum and entries, termination conditions, your second trade is the 50-50 trade, the potential to break trade. And notice that it says one area not broken, highlighted. There's a reason. The more areas that aren't broken, the more hope you have to put behind it. The conditions are very similar. Odds favorable, momentum on the 13-2. This is key. Momentum breaks areas. You can't take the trade without it. But you also want small triggers outside of the large on the 5-1. You want that same momentum mirrored, giving you the best chance of success to break that area. The third one on the checklist is no divergence on the 5-1. Divergence is a killer of this trade, guys, and it's the most ignored feature. Most people's desire to be in the market outweighs their desire to be safe, to have an advantage. Divergence crushes your advantage on a 50-50 in most cases. Not coming from a good top or bottom crushes 50-50s in most cases. Remember, this plan is designed to optimize your chances of success because that's what creates confidence. If you check yes to each 4, get in at the area. Notice that it reminds you, if there's divergence, don't trade. Guys, this is a medium probability trade. Medium probability trade has to be managed assertively. You're still going to use the window of opportunity. You're still going to use the reversal bar. But notice the next thing that it says. If divergence prints, exit the trade. Guys, I can't scream that from the mountaintops any louder. Divergence kills 50-50s for the new user. $100 first contract or at the first trouble spot. But Mark, what if my first trouble spot's only $80 in the distance? Well, then you just had an $80 first target, right? Because why not get paid at the place that you're hoping breaks? And then base hits, guys, $200. Get to break even as soon as possible. That is your KISS plan. If you are working on trades outside of what I teach, guys, I'm also going to give you a KISS plan generator where you can create your plan through your chart reading, through your practice, through your simulation, through your study. And you're going to define your entry the same way you do on a high probability trend trade, but you're going to write out what it means to you to get in. Taking pictures, guys, having pictures of your perfect long, of your perfect short, making sure that it's rules based 100%. Going back to your spreadsheet and making sure that you're putting it in your favorite looks so that you can find it each and every time it sets up. Guys, you have to build a plan. If you don't have a written plan, you don't have a plan. And you are subject to emotion and fear and greed and all those things. Keep it pragmatic and keep it focused. And that is my first hour, guys. This is what I talk about every day. Every time you come visit me, this is the first hour. Talking about advantages, talking about momentum, talking about clear paths, and understanding that sometimes you don't have it. Sometimes you don't have those advantages, and it means that you have to sit on your hands and do absolutely nothing until you do. And that's kind of what we're doing. Are there any questions about a high probability trend trade, guys? Are there any questions about momentum or termination conditions? Is there anything you'd like to know about entries? Nope. Cool. Bunch of experts. I love it. 46 people, all rock stars. That's what I like. I'm going to take a few minutes, guys, and when I come back, we're going to start looking at the pictures that you guys have posted. We're going to relay them all back to those three advantages, whether they're high probability trend trades or not. I want you to squash the desire to play policeman on other people's trades. Just because they're posting in this room doesn't mean that it's a high probability trend trade. A lot of people did a lot of study and they developed a plan based on specific looks. They develop a plan based on their ability to read the charts. And a lot of times it doesn't make any sense to the new user. So don't worry about what other people are doing. Nice trade, Ron. Worry about you. Worry about giving yourself the best of the best, giving yourself that foundation, understanding the knowledge. Get your pictures in the room, guys. Every time you see something, every time you take a trade, every time you have a question about what you're looking at, post your pictures in the room, guys. Two charts, write why, because this is going to minimize your learning curve. You have to post everything, guys. Win, lose, or draw. Don't hide losers from me. I don't love you any less if you lose a trade. I don't love you any less if you break a rule. To be honest with you, I love you just a little bit more because you had the courage to put that out there to say, hey, Mark, I want to be better than I am right now. How do I fix this? You need feedback, guys. If you win and the rules are wrong, it creates this short-term victory, this little endorphin rush, but it's a long-term failure. Because more often than not, if you're just trading to get lucky, luck runs out. How are you going to know the difference? Post it in the room, get that feedback. If you're on the simulator, if you're just snapping pictures, you're simulating, you're in the classroom, guys, you can't lose money. You could go down $1 million on simulator and still be able to pay the mortgage next month. Hopefully you posted that $1 million loser in there so that we can see what went wrong. Um, you don't have to trade a 50 lot on simulator. Nobody's impressed, right? Learn the patterns. And then the more you do, the more you post. The more you post, the more you learn. The more you learn, the quicker you get to your goal of being financially independent, right? Hitting your goals each and every day. Buying that island in the South Tropic, inviting me, serving me a pina colada, and saying, thanks, Mark, for keeping me focused on the best. That's the plan. So call your real estate agent. I'm going to run a lap, guys. I'm going to leave you. I'll leave you with the market. I'll close that out. Coming right off a termination condition. Hopefully none of you hoped that would break and got in at the area inside of favorable large triggers because, guys, textbook, don't do it. I will see you in 5 minutes. If you have a picture, post it. If you have a question, post it. And then we'll just start looking at all of your great pictures and talk about the advantages. And if there's lessons you guys want to cover today, let me know. I love Fridays, especially if the market slows down. We'll cover anything and everything you want to talk about. Back in about 5, guys. Let's get back into it. Hour number 2. So now we're going to start looking at the pictures that you guys have posted. Crude oil is working its way down, having a good time. I'm going to scroll to the top. And guys, for those of you that didn't do it, NinjaTrader 8 should have given you a link or a little pop-up that said, hey, it's time to roll crude. I did a little check on the volume this morning. They were 23,000 higher at about 5 in the morning. That typically grows throughout the day. So if you're looking at crude oil and our charts don't match, there's a good chance that you're still on January, and I've already moved to February. Make sure that you are in the right contract with the most volume. It typically has smoother trading. Then Ron got us going today, and Ron says with odds favorable momentum and a clear path, he will get in and get out and make his money, guys. And this is probably one of the most effective uses of chart reading that I've seen. When the triggers are this strong, it's likely to push. And you'll notice that he doesn't hold for home runs, guys. He gets in, he gets out, he gets paid, and he waits for the next one. This is an awesome example of using chart reading to formulate a plan that suits your needs. Never get tired of looking at it. About 15 seconds. And then I've got JW next. So JW, you got a 50-50 going into terminations. Man, that's like the tightest 50-50 ever, JW. But it's true, right? The smalls are above resistance. Price hadn't reached the next area. You're 50-50. You take the quick pullback and quick profits right at the trouble spot. JW, this is an awesome read. This is an awesome read. Termination, reverses. Because when it starts getting into these tight areas, people just go, shut it down. You're like, well, no, the triggers are above and price hasn't hit. And heck yeah, I'm in it. Area inside. I love it. Great trade, dude. This is confidence through repetition. Without a doubt. This is getting confident with what you're seeing the same thing happen over and over. And just having the courage to pull the trigger. Because you've seen that pattern. You understand that advantage of momentum. And that's the goal every day. And then Dwight, we already hit it once, but momentum, potential to break, perfect entry, easy money. That's it right there, man. That's how you do it. And then Tony the Tiger. Let's see what you got, brother. Tony says, odds favorable, everything cranking, perfect entry, let's get paid. Love it. It's a nice one. And you knew exactly where the market was likely to stop. That's the best part, isn't it? No hoping, no holding and hoping. Man, I hope it goes up forever. There's a giant run of yellow dots with no triggers through it. That's great profit taking. Nice job, Tony. You guys are killing it today. I like it. Keep doing it. And guys, here's one of the things. If you're ever in this classroom and you see somebody take a high probability trend trade and 4 or 5 people post and you missed it, it's okay. It just means that you need to study those looks a little more. Avoid the temptation of feeling left behind because a lot of times somebody's just ahead of you. Trading a one lot because it's so volatile. This one's beautiful too. Everything says up, the momentum is cranking. Look at that perfect entry all the way to the target. Tony, outstanding, man. What a great, great trade. 2 of them in a row. Everything says up, you get paid from an area inside of favorable large triggers. Everything says up, you get paid from an area of support inside of favorable large triggers. I don't know that you could do that any better, Tony. And then everything says down. You almost suffered fear of missing out. You got to walk away. This would have been stopped out instantly. Volatile market. Why would that have been stopped out? What was wrong with the trade, Tony? For a momentum style, you weren't waiting for the pullback to resistance inside of favorable large triggers? I see what you're saying. So if you had not taken your momentum entry, right on, did you catch the pullback to resistance inside of favorable large triggers? Did that set up? Because this looks like the perfect short trade to me, setting up. And I know it's RTY. I don't have that chart. Did it produce, or did it bounce back up? Just curious. I'm not trying to give you work. It did bounce up, huh? Crazy. That's one I would have lost. That's beautiful. Pivot stop out at resistance, odds favorable, clear path, perfect entry. Man, I'd lose that one all day long. That was such a good look. But good job not just jumping in late in the move. And then Ron, termination, pivot stop out at resistance, all triggers below. You let your small chart roll and give you divergence and just take a quick little pop to get back to those large triggers. Really well done, Ron. And then when price clears the problems and the momentum is the strongest, bingo, bango, bongo. Base hit number 3. One more and it's chili dog time. Great job. And then David, you said you had 3 of these this morning. Good bottom, 50-50, didn't work. Where are the other 2? Let's see if they all look the same. If you want, yeah, no worries. So guys, let me ask you a quick question. Did anyone pay attention when we talked about the probability of the highest probability trend trade working? High probability trend trade that comes from a termination condition with every rule met. 70 to 80%, right? Do you guys remember that? And I like to remind this every now and then. A medium probability trade forfeits one of those advantages, guys. 33% of your advantages go away on a medium probability trade. What if you just subtracted that 33% from the 70, right? And now suddenly it's, oh my gosh, that's math. 37% winners. And I don't know if that makes sense. I stink at math. But if you took that 30% off the 80, then you're what? You're 50% winners, right? So David, I like the look. I think you did it beautifully. And you lost virtually nothing with the opportunity to win tons. Your stop is appropriate. Your entry is absolutely beautiful. I mean, everything about this had a great chance. And it's okay. You were in at, I'm trying to see, 31 and out at 28. 3 ticks. Man, that is acceptable risk for the look. And what if you only won half of these, right? What if you only won half of these? You're still doing all right. When you manage it like that and you make $200-300 on the other ones, you're doing just fine. Great management. I think that is the absolute best part of this one, is it was beautiful, beautiful management. In where the market's likely to continue, 2 ticks below. And again, I'd take this one all day long. I don't think I would hesitate, not even a little bit, to get into that one. I think it's a great trade. And then Ron says one mo. Everything down, super fast. Odds way favorable. Base hit, bills paid. That's it for the day, huh, Ron? Chili dogs? Everybody take a look at your clock. Mine says 10:25 a.m. That's Eastern Standard Time. And Ron's done. 3 trades, Ron? Is that right? 3 trades and done, guys. 5 trades and done. Sorry. No good at math. We've already established that. That's not a bad day, guys. That's a lot of time to go swing golf clubs. A lot of time to go fishing. Let's take a look at it, Gary. Did you annotate the chart? No worries. I'm here. Guys, just post them. You don't even have to announce that you're going to post them. I will see them, I promise. And if I don't, just tell me. Man, they're killing crude oil, aren't they? Egads and little fishes. So let's do a quick chart read. Watch this. Let me snap the picture before it does anything else. Did we have odds favorable momentum, guys? What do you think? Was rule number 1 met? Well, it's climbing back up on the bridge right now. Guys, give me a Y if you see it. I do not have odds favorable momentum. I do not have strong triggers. I do not have a market that's likely to continue in the direction of the trend. Does everybody see it? Rule number 1's not met. If you're really adamant about following rules, rule number 1's not met. You're not even looking. But you're saying, but Mark, there's a clear path. Mark, it hasn't reached anything. Supports resistance. But Mark, I know I don't have momentum, but I have a clear path. So where does that put us in the rules? We're on our way to medium probability, right? I don't have momentum, but I do have a clear path. So what's the tiebreaker? Do I have an entry area, an area inside of favorable large triggers? Damn it. There's my triggers down here. All my areas are on the wrong side of it, right? Do you guys see it? So, no odds favorable momentum, but a clear path. And guys, there's that magical word, but a clear path, but a clear path. I know I don't have momentum, but I have a clear path. No area inside of favorable large triggers. So guys, this is where you have to ask yourself, especially after you watch crude oil drop out of bed for 75 points. Are you willing to wager your new Corvette on only one advantage? Are you willing to wager your kid's college fund on only one advantage? Are you willing to give me everything in your wallet with just one advantage, hoping that the market goes down? Most of you would say no. Most of you say, no, dude, without momentum or entry area, that'd be silly, Mark. And then somebody's going to take it, right? Somebody took it at the mid-band. Who took it? Raise your hand. I did 6 months ago. Guys want to see what else I did? Six months ago, I took it at resistance, and I got run over because I believed in the clear path. And then I took it again at the mid-band because I said, ha, there's no way it couldn't go down from the mid-band. And I got run over again. And then I said, well, I better take it at resistance again because I really want the market to go down. And they just stopped me out again. Has anyone ever taken 4 or 5 trades when you realize that now the trend is against you? That now the momentum is against you? Guys, that is such a common thing. Don't get married to an opinion. Focus on what's happening. Focus on the advantages in place. Weak triggers, but a clear path. No areas. Joel says, nope, not for me. Thank you so much. Steve says, I love it when it's coming off a termination condition, and I love it when the momentum is strong. And look at that no divergence pullback to support. Steve, your triggers are a little different. I'm going to assume you know what you're doing. Did you know that there is a template, Steve, to make your 13.2 look very much like your 5.1 with both large and synthetic? I haven't seen you post in here a while. No? Can I help you with that? Let me see if I can find one. Let me give it to you. Ninja Trader 8, yes? Bum, bum, bum. I got you, my friend. I'm going to give you, um, I should have it in here. Here we go. It's in a zip file, Steve. That's the 34 that John Novak put together. And then here is, I should have just done these together, but I made the mistake. Here is the 13.2. So there's the templates for your NASDAQ. And what that does is that'll actually make your 13.2 look like a 5.1. So you'll have the synthetics, you'll have the large. And then Steve, since I have you in here and you're clearly a wonderful person, I'm going to drop my spreadsheet in the room for you. And I don't know how much experience you have with the NASDAQ, but one of the biggest challenges that people have is getting run over by the small triggers on the NASDAQ. So in that spreadsheet, there's just some of my own study about it. If you have any questions about anything, let me know. I'd love to give you as much feedback as you're willing to take. And a lot of it has to do with when these when the small triggers are really strong against, the advantage really comes from the first close on the correct side, and it keeps you out of about 1,000 pounds of trouble every day. So get your templates built, get them looking. So let me pull up my NASDAQ. I'll show you what it can look like, and let me know what you think. So there's the NASDAQ. Look at that. It's like a 5.1, right? I have large, I have synthetic, got everything that I need. So it makes it easier to define that entry point. Um, so that you can get in, you can define, you know exactly where stops should go. Um, Anyone else notice that there was odds favorable momentum and we hadn't quite reached the Fibonacci area? And let me do my math here. 56, that's 100. There's $100. And now I'm break even. And we'll use all that momentum to see if it gets to a fib. What do you guys think? I can't lose. I already got paid. Guys, that's how quickly it can happen. That's how quickly you can analyze a chart, guys. I just pulled it up to show Steve what it could look like, and there was a high probability trend trade. So I took the entry at the area inside of favorable large triggers. I made $100 on the first contract. Actually, I made a little more than $100 on the first contract. I've gone break even. If I only want to hit 200, there's my $200 profit right there, guys. It's not even to the fib with all that momentum. Pretty awesome. I wonder if it's going to make it. I don't know. Don't care. All right, Gary. Odds favorable momentum. Okay, there's your first rule. Where is your second rule? Did you have a clear path, Gary? Nothing at all, right? Not U60172. You didn't? You did, my friend. You had a perfectly clear path. What area did price reach at 71.23? None, right? All right, we're going. So what are our termination conditions? And Gary, let's go through it. This is why I appreciate when you guys post so much. What what area? Whoops, sounds like they got us break even over there, guys. Um, when we talk about areas that can stop the market, areas that we're using on the large chart for termination conditions, the ones that we're looking for, Gary, is we're looking for blue Fibonacci support, red Fibonacci resistance, yellow one-to-ones, or one of those divergence lines. Are you good with that? These are the areas that can stop the market. And the recipe is price reaches it, right? So price never reached an area. Ever. You had the clearest path you could have ever hoped for. Does that make sense? And I know that you're saying, but Mark, there's divergence there. So price created this divergence. And here's the reality of it is it didn't print until somewhere right up here. So you didn't even see the cyan line until you were already out of the trade. So you had odds favorable momentum. You had a clear path. And Gary, I'm not going to lie, you had the perfect area inside of favorable large triggers, didn't you? You had the recipe for the best of the best. You had the recipe that's amazing, that typically wins 70 to 80% of the time. So what I want you to, one divergence, doesn't matter. One divergence on a small chart when everything looks like this on a large chart, couldn't care less. This had nothing to do with the trade. Don't waste your finger strength typing it out. Because the only thing on a small chart, when my large chart looks like that, the only thing on a small chart that's going to ruin my day, I'm going back to, I just keep going back to the rules, keep going back to the rules. The only thing that would have made me second guess that trade, Gary, was three divergences in the same price range. And my friend, you had the sexiest short look that you could ever hope for. You took the perfect entry. The only thing that I can nitpick on such a beautiful trade with such an amazing entry is that if this is where the market is likely to continue, what's 5 ticks above 42? 46, 47? Doesn't it make sense that if price gets up here to 47-ish, that the good time's probably over? That's $100 on a two lot that you could have saved by being 4 or 5 ticks beyond the window of opportunity. Does that make sense, Gary? So your entry is perfect. Your conditions were spot on. You defined where the market was likely to continue like you were getting paid to do it, which meant that you had, with absolutely no question, the ability to recognize where the market shouldn't go. Stop giving so much away. That's the only thing I can say. That trade's actually so stinking pretty and has so many advantages that I'm going to steal it and I'm going to go to client trades and I'm going to drop it in there because people should be studying this look even though it didn't work. So that is Gary E's perfect trend trade short entry. Absolutely. Thanks for posting a chart. And can I ask you, because I know it did for me, when you post the chart and you find out, oh my gosh, I didn't do anything wrong. I had every advantage. I took the perfect entry. Life is good. Doesn't it take the sting out of it just a little bit? Absolutely. Thank you for posting, man. Guys, this is the best part of this classroom is finding out that it turns out you're pretty kick-ass. All right, David W., here's a second loss. Let's take a look at it. Let's break it down. What's the difference? Where's your first loss? Let me go find your first loss. Hold on. Scrolling up, scrolling up, scrolling up. I lost you, David. Hold on. I love doing side by sides because you know what I learn is that when I take a second and look at it after the fact, it's easier for me to recognize challenges that may have been present. So we're just going to do two charts, David, and then I'm also going to do this. And I don't know if you're trading the KISS plan. And if you are, awesome. And if you're not, that's okay. But I want you to see the difference. Let me take a picture. Actually, let me make this just a little bit smaller. I'm going to use my Snagit tricks a little bit here. So we're going to do this. Are you cool with me doing this? Even if you're not, that's okay. I'm going to do it anyway because that's kind of how I am. Yeah. All right, so here's one loser. I'm going to put the kiss plan on it. And then let's go to the second loser. Let me take a picture. And let me put the kiss plan on it. All right, so we'll start with this one. Odds favorable, momentum on the 13-2. I feel like that's a yes. You good with that one? Yes. So David, talk to me about the small triggers. I can't see two lines of them crossing over. Maybe they peek their head, right? So this is going to be my first challenge. And I'm going to share it with you. Small peaking, not smashing. You remember that annoying part where I talk about termination conditions and I give you guys the 50-50 look? And I say about 10 times, because I love the sound of my own voice, let the small smash through the area. Let the small smash through the area. David, you remember that fibs are where decisions are made, right? One-to-ones are where decisions are made. And if your small triggers are just eking over, just barely over, it stands to reason that you're still in that decision-making zone. Does that make sense? So let them smash, brother. Let them smash through that area. And then the other thing is that area is not broken, but this area is not broken either. So I have two areas, a range of about eight ticks, 8 or 9 ticks, that I'm hoping breaks with just that little peak over the top. And that's cool, right? And then smalls outside of the large. We got it. Not yet. We haven't gotten there yet. Right now we're just talking about the look and how that look with them just peeking their head over isn't nearly as advantageous as if they smash through like they're getting paid to do it. So large chart has strong triggers. I love it. Small chart has strong triggers. I love it. No divergence on the 5-1. Not true. There's your divergence. You do have a good bottom. So if you're only kiss planning it, if you're only following the KISS plan 100%, rules not met. Would you agree? Totally. Yes, now. This is why I like going back. So David, let me throw something else at you though. With a good bottom, there are times, allegedly, when nobody's looking, that I'm cool with one divergence. If I'm coming from a good top or bottom, one divergence doesn't freak me out so much when they smash through. Because one little loss of momentum up against a great decision, I'm pretty good with it. So David, your entry is beautiful, isn't it? I love it. Support inside of favorable large triggers. Second divergence prints. You take an exit. I think you managed it beautifully. I think that you made a calculated choice based on one divergence because of a good bottom. I think it smashing through gives you a better chance of fighting. Not two areas gives you a better chance for sure. 46 was your biggest problem right here, and it's only 4 ticks off in the distance. It's hard. It's hard to just take 4 ticks. It really is. It almost doesn't even feel worth it. And then when divergence prints, it happens on the 3rd bar. Yeah, the small trigger smashing through. Can I show you a trick for managing divergence when you know that the second one's going to take you out? Okay, everything's down on the NASDAQ. Here's my reversal bar marker. Do you see it? This is where this bar becomes a reversal bar. If divergence is going to be true, it's going to be 2 ticks above that reversal bar. My reaction time isn't always fast enough. So I'll literally put my stop 2 ticks above the reversal bar, and I'll keep a finger on it But let's see if it comes up here off of the support, and maybe it'll print divergence for us. So I know that divergence is a potential thing, right? 2 or 3 ticks. I want to be able to see it. I don't want to stay in a trade if divergence prints. Well, it didn't print, and it got me. So maybe a little bigger, but the Nasdaq's super fast, right? But that 2 ticks behind the reversal bar, David, it gives you reaction time if divergence is a key factor. So that puts you about right here. Maybe saves you a tick or two on it. Okay, awesome. And sometimes it goes so fast you just can't do anything about it. I think you took a good shot. I think it's unfortunate that you lost too. It always hurts a little bit, but smashing through is a great lesson there. Thanks for posting, man. That's a good one. Guys, there's so much great information in the losers. There's so much great information in the losers. Ron, you are just boring, dude. Come on. Same thing. Oh, look, odds favorable, clear path. I'm going to get paid. Oh, odds favorable, clear path. I'm going to get paid. I love it. I love it. I love it. Guys, it's just Ron found what works for him, right? He found that one girl that said yes, and he's not letting go of her. Smart man. I love Ron's boring trade. You know, Tony, it took me, I would say, at least 3 months to really figure it out and get comfortable with it. There were just factors. I didn't have trust. It took me a while to get good at that one. Everyone's like, oh, it's so easy. Just jump in and jump out. And there's more to it than that a little bit. So I like it. Ron's my hero. If I ever grow up, I want to be like him. Weak triggers and a clear path, and the areas on the wrong side. And Joel, you chose to skip. I like it. Guys, when you're struggling with confidence, if you're struggling with confidence, be a stickler. If you're struggling with rules adherence, be a stickler. Um, be willing to miss stuff, especially on sim. Who cares? It's simulator, guys. Eventually, that might be your trade, right? Or you might wait for a reversal bar because it is outside. But those weak triggers have a good shot of pushing back to 71.20. Let's see. It didn't go too far, did it, Joel? Isn't that a lot of work for a maybe trade? That's a lot of work for a maybe trade. My brother and I were talking about that one day. We were both taking these trades, and they fit the rules, but they were tight. And when everything was said and done, we were up a little bit money, and we both kind of stopped. And we were like, shit, that was a lot of work. That was a whole lot of work for not a whole lot of profit. I like the easy ones. I really do. And then on the NASDAQ, everything says up. The path is clear. You take the reversal bar entry. As it starts to come up, you're protecting yourself. Target one hit, and you were stopped on the trailing. Yeah, Tony, I heard mine say it in my ear. Paul, it sure did. I heard it say it in my ear that my stop got hit. But your first target got hit, right? I'm telling you guys, and this is what a lot of people forget. If you make $100 on a trade and then get stopped out break even, what happens if the best you can do 5 times a day with the most conservative, advantage-laden trades you can take, and you can only make $500 a day? Is anybody mad about that? Is anybody mad about $2,500 a week? Or is anybody pissed off that they only made an extra 10 grand this month from taking the best of the best and it not going to your profit target? And I think we lose sight of that sometimes. I think we lose sight of that sometimes that, oh man, I've got to hold for bigger moves. Oh man, I've got to trade more contracts. Guys, If you can't figure out a way to become filthy rich on a conservative $120,000 a year on a two lot, something's wrong. Because the four lot with the same management's like 175 grand a year, right? And a 10 lot, like, oh, just don't do some math. Everything doesn't have to be a home run, guys. Three left turns makes a right. So um, it's okay. Tony, I love the way you manage trades. Paul, I love the way you manage trades. I love that you guys are adamant on getting paid before you go for the home run. And that's it. It was close, Joel. It was close enough to work, right? It got a little bounce and then it headed the other direction. Love it. Great job. Joel, I feel like you're doing everything that you need to do today. I feel like you are 100% on point today. Nice job, man. And weak triggers for the win, right? Weak triggers for the push. Three divergences for the push. I love it. You ever have one of those days where you follow your rules religiously and it works out every time and you're like, I love my rules. And then you get lucky once and you're like, oh, I better change my rules because I got lucky and lucky feels good. That was it, guys. Look at that. $100 break even. I'll take that all day long. Keep them coming. Keep them coming. David W. Eking or smashing, my friend. Eking or smashing. No, that's right into a termination, Paul. That is directly into a big ass fib with absolutely no triggers. There's the eek. Well, you should have upgraded to the better plan. That's a 21. I have a 21, but I'm on 7, and I did a complete reset repair. So trade your charts, without a doubt. I have to miss this one because it's a termination condition on my charts. If I didn't have that big line there, I love it. I'd already be paid on the first contract. Gotta trade your charts. What do you guys think at 941? 50-50 with divergence. Stopped its cold. 1, 2, 3, 4, 5, 6 divergences in the same price range, right at support. Did anyone have any illusions about the market going down? I hope not. I hope not. Weak triggers, weak triggers. I love me some weak triggers. Termination. Is it going to break? Is it going to break? Is it going to break? Oh, man. It's pushing. Where are my triggers? Uh-oh. They're eking. They're eking. Oh, now they're breaking. 50-50. From a good bottom, full reversal, 50-50. Now I'm checking my checklist. If divergence prints, I can't take it. If there's no divergence, oh man, deal breaker. Son of a gun. Kiss Plan says I am sitting on my hands. I'm okay with that. My hand is off the mouse. Look at that. Oh, it's an uptick. Should I break my rules? It's an uptick. Oh, I gotta break my rules. This is what you're gonna do. Oh no, wait, it's a downtick. No, I shouldn't be in. Oh, that's another downtick. No, 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 nope, nope. That's an uptick of support. I should be in. No, no, downtick. Damn it, I shouldn't have been in. Has anyone ever done that? Your chart has no divergence? Oh, man. I'm at the bottom of the window. I'm at the bottom of the window. And now on NASDAQ, my small trigger lines are lower than the reversal bar marker. So if you've been following the Mark Novak NASDAQ Academy, That says at least wait for a close on the correct side of the triggers, even without the divergence. Do you recognize it, Tony? Do you see it? Steve, this is one of the things that you're going to see in that spreadsheet. Small triggers say, dude, just be patient. They're likely to behave as resistance. And they're not guaranteed to, but it's happened enough that it's a pattern that's worth respecting, right? So let's just watch this one and see what happens. There's no more pictures to go through. And yeah, Apex has 1 day qualifying. You know it's brilliant, right? Because everybody in their database is going to throw a Hail Mary 10 lot and hit their 3 grand or 5 grand. And then when they get funded, they're going to blow it out instantly after they pay for the funding fee. They're going to get 10,000 people that got lucky and funded, and they're going to take $140 from each of them. And then they're going to blow out, and they're going to have to start over. Because they're going to try to take one trade to do it all. My brother was like, 1 day funding. I'm like, dude, who cares if you get funded in a day or 7, right? If you can't get funded in 7, you're not going to be consistent from 1. You guys notice how much it's stalled out right here at the fib level? Do you think decisions are being made? Do you think buyers and sellers are fighting right over this key area? What do you guys think? Let's turn the discussion to the classroom. Does anyone else think fibs are pretty freaking amazing? I sure do. Who knows without question whether it's going to go up or down? I don't. I have no idea. All I have is my rules. Joel says 50-50 with divergence. Kiss Plan says no. Beautiful, Joel. Hey, Joel, how many losers have you avoided today by sticking to your plan? Have you counted them yet? All of them. You've missed all the losers. A lot of things happened here, right? Small triggers were too close, so Tony said, I'm not doing it. Divergence printed, Joel said, I'm not doing it. Isn't that pretty cool? I think it's amazing. I think it's amazing to have rules that have been proven, that are repeatable, that are trackable, that are studyable. Is that a word? Studyable? Studyable? And all you have to do is follow them. All right, so here's the next question. NASDAQ traders, who talked themselves into this one? Who said to themselves, you know what? I sure hope it goes up. I'm going to ignore all the red flags. I know she has crazy eyes and carries a bat in her car, and she's already wanted for 3 suspicious disappearances. But I really want to take her to the movies, right? I dated her. But did you notice how, and guys, I'm trying to do this for a reason. Did you hear how I talked through everything? I didn't just say, hey, Steve, take care, man. I didn't just say, I hope it goes up. I started analyzing and reading my indicators, and I started walking through it. What do my rules say? What is my look? What does it mean? What do the rules say? And guys, I do this every time I take a trade. I don't just do it in the classroom. I don't just do it like right in front of you to show off, hey, look how smart I can be, whatever. This is literally me talking through the plan, talking through the KISS plan, talking through the conditions that have to be met to take the trade. If you're not spending that sort of effort each and every trade, and you're wondering why you're losing more than you're winning, guys, that may have something to do with it. Take a video, click capture, and when you think you want to take that short trade, hit play. We'll make a video, and we're watching it here. 3, 2, 1, go. And I've reached a mid band and my smalls aren't below the large, and I'm trying to figure out, I don't really have odds favorable momentum, and I don't have an area inside of favorable large triggers, but man, there's no divergence here, and I sure do wish it would go down from the mid band. But I don't have rules met over here, and I don't have an entry here. Ah, you know what? To hell with it. I'm just going to go short because I sure do hope. And then you're going to stop the video. And if you go back and you play these videos where you have to talk through everything that you're doing, where you talk about the advantages, the disadvantages, you will literally tell yourself that you just broke your rules. And it's a huge thing, guys. It's such a great study tool because it forces you to talk out what you see. It forces you to talk out what you think, what you feel, what your rules say. Actually like that trade, but that one's in my repertoire. That one may not be in the high probability trend traders. Um, but do it every time, guys. Do it every time. So if you're at that point and you hate the sound of your own voice, do it. Man, NASDAQ just can't figure it out, can they? Leave her there, Ron. Yeah, and you never do. You end up marrying her. That's how it works. Um, all right, guys. Second hour's done. I'm gonna take a break. I'm gonna go refill my water, stretch my legs. Last hour belongs to you. And I'm gonna say it like I say it every day. Guys, I want you to ask questions. Jorge, I want to hear from you, brother. What are you thinking? What do you need from me to make life good? Mike B, what can I do for you? Wise clicks. It's just fun to say. Got a question? Maybe I can make you just a little bit better today or help you get on that path. So if there's something you want to talk about, guys, last hour belongs to you. Drop it in the room. I will be back in about 5 minutes or so. All right, y'all, let's get into that final hour. This is your hour. So let me know what you want to talk about, and let's see what happened. Paul says everything is up, odds favorable, clear path. He doesn't have a fib, so it made perfect sense for Paul to take the trade. He gets in, he gets paid, and he has absolutely no risk, nothing but profit, just rocking it out. And then he said that he did get out when there was divergence and the small triggers inside. And if that divergence printed from the one-to-one, Paul, absolutely. That's a good one. Hey, PFI, nice to see you in here. There's the NASDAQ on a 50-50, one divergence from a good top. And there it is. And Paul, were you here yesterday? Who were we talking to? One of the things, it's not a termination condition. I think we were talking to D-Rock. It is not a termination condition. You know what, Ron? Hang out as long as you want. I'll give you the microphone if you want. You want to teach for the last hour? All right, guys. Divergence from a one-to-one, not a termination condition. Divergence from a one-to-one very often pushes a little lower. It has the potential to. So if you're starting to give up advantages elsewhere and you see that, good reason not to lose money. Just a little heads up pattern reading. All right, guys, we have 50 minutes. Let's look at the spreadsheet. Midband is a termination condition. What does that mean? That means that when price reaches a midband and the large triggers are more than a full bar away, there's a huge gap that tends to get filled. It acts like a vacuum. Midband is a termination condition if the large triggers are a full bar away. Kind of cool, right? That was right in the spreadsheet. That's something you guys could study this weekend. There's something says gap theory. Large triggers a full bar away again. Man, even from a good bottom, it closes the gap to the large triggers. That's kind of cool. Well, that's a pattern that repeats itself. 3 divergences kills trend. Everything says down. Bunk, bunk, bunk. 3 divergences, and it heads the other direction. Sounds a lot like all the stuff we say over and over and over. Awesome termination. And this area still has to break before longs get easy. Got to be patient sometimes. 4 lessons, 1 chart. I love this. Odds favorable. You guys get this picture today. Starting from the left, odds favorable momentum in 1 picture. No triggers through, that's a termination. Price reaches the midband, large triggers a full bar away, that's the gap theory. 3 divergences on the small chart is also a termination. Pretty amazing. Guys, that's 1 picture, 4 patterns. Large downtrend all day with little retracements all day on large chart. So even though triggers say up, bad bottom suggests it may retrace to midband. So avoid long trade. Is this a valid thought process? Pedro, great question, man. These are the kind of pictures that I like. How about this? You're going to love this. Oops. I didn't mean to do that. I'm still on video. Let's go to image. I'm going to give it a yellow arrow. How do you like that one, Pedro? It has nothing to do with the downtrend. It has nothing to do with the all-day momentum. It has nothing to do with anything other than price reach resistance and absolutely no triggers broke. No long trades. Because it stands to reason that when the market's done this all day long, this could be a little overrun. It could be a push, and it may just go up forever, but let's let it break before we do, right? Let's let it get a clear path before we ever even consider it. What market was that? I didn't look. Was that the S&P or was that crude? That was crude right here, right? Oh, that was NASDAQ? I didn't look at the prices on it. Yeah, that was NASDAQ. So let's, and I'm not sure where you took that picture from. That was a while ago, huh? No. Is that today? Oh, that was yesterday. There it was right there, huh? Right at 153. I guess that downtrend didn't have much to do with it, did it? And then the cool thing is if you just held tight, it looks like right at 2 o'clock, they gave you a rules-based entry. At least to get a little bit out of it. Yeah, that's why I don't make those opinions. Um, that's where I used to sell. True story, Pedro. I would sell the mid band and then I'd sell resistance and then I'd sell the next level and then I'd sell the mid band and then I'd sell here. And I would sell myself on the idea that it's been a downtrend all day and it's a bad bottom and there's absolutely no way that market could go up. And sure enough, 100 points later, I'm all done. Not that any of you guys have ever done that, but I certainly have more than once. So I hope you don't fall into the same pitfalls. That's a great picture, though. And it really does just remind you it can be simple, right? Either the rules are met or they're not. That termination condition, you just don't know what's going to happen. You don't know if it's going to break. And I'm a big fan of, I would rather trade what is actually happening than what I hope happens or what I think is happening. Or, um, my brother and I always joke one of the most dangerous words for a day trader is it should. Because then you have this prefabricated notion of the expectation for the market, and it loves to humble you. What do you guys want to talk about? Tell me what you want, what you really, really want. Hey, Jose G, nice to see you in the room. Been a while. PFI, how are you doing after the class? Are you over in the master class working? Took it last week. You can still go in the master class, right? It's open forever. Feedback is ongoing. Oh yeah, dude, get back in there. Post all your pictures, get all the feedback. Yeah, just log in and get over there. You should be fine. I'm pretty sure that the master class stays open. And that's part of the deal is you get John Novak's feedback. So take advantage. You had a great week. I like hearing that. Jeremy, it is $3,500 for 5 days live market with John Novak. And then there's follow-up too. There's a classroom that's built into Discord for the people that have been in there. No, you're in the class for a week, and that goes through on a Zoom meeting. That's done privately. You should be getting paid out on your first account. Sounds like that was a good investment, PFI. Nice job. It's 250,000 accounts on EarnMax. Very nice. After the 1 week, you can observe presentations. No, the presentation is it. You get a week with John Novak. You get his undivided. And then there is a Discord room where people that have taken the class. And guys, I reserve my right to be wrong. And let me just look. Yeah, there's people from last week's and 2 weeks ago that are still in there. So it's not just 5 days. It is literally, it's 5 days. No, you don't get that, Shogun, unless you're in his class. It's for the people that take it. It's everybody's charts, it's everybody's trade, and it's John Novak's feedback on everything that you do regarding what he's just taught you. So you get the guru for 5 days privately, right? And then after that, it's ongoing. It's like having that refinement process as you go through, presenting your charts, asking your questions. There's people that were in there from 2 or 3 weeks ago that are still posting. Um, I love it. I was his guinea pig. I was the first person to do it. He taught me before he ever taught the class because I'm a pain in the ass and I'll come up with every devil's advocate question that you can come up with. Um, I don't know. I feel like it's pretty easy to hit goals with it. That's just me, though. I'm not a salesman, and I'm not trying to get you guys out of my class. But I just know PFI did it, so I was just curious how it's going. It looks like a lot of people. It's just like anything else. It's a learning process. You're going to make mistakes, but the cool thing is just like this classroom, you get feedback. I can't teach what he teaches. I don't have the repetitions or the knowledge or whatever you want to call it, but it's a pretty kick-ass class. Whew, crude oil, rolling, rolling, rolling. Let's see. That was a 50-50 on the one-to-ones. Oh, look at that. Three divergences. Isn't that crazy? And then it hit the one-to-ones again, and all the trigger lines are above, and it appears to be bouncing. Neat. Tell you what, I'm just going to mute the microphone, guys. When you guys give me something to talk about, I'll start flapping my gums. Otherwise, we'll just watch NASDAQ. Large triggers are down and the small triggers are up. I can't have odds favorable momentum. Synthetics are down and large are up. I can't have favorable large triggers. Man, I feel like my rules aren't met. Joel, do I have rules met for a long? Help me out here, man. You have been the rule follower today. I don't. So what should I do? I should go short then, right? Because the large triggers are down? Or no, wait. Maybe I should go long because the background's green. Man, I should probably just stop looking because I'm going to talk myself into a bad decision. Great job, Joel. All right. It is 11:23 in the a.m. The hills are alive with the sound of music, guys. We have talked about momentum. We have talked about terminations. We've given you a plan. Um, Let me give you some weekend homework. For those of you that get your guts in a knot, emotion-free trading PDF. Guys, this is great. Great read. I love it. I didn't write it, but I love it. Seven Habits of Highly Successful Traders. It'll take you an afternoon. Ron, I'm just an hour behind you, so it's 10:30, 10:20 my time. In the great state of Texas, we are Central Standard. Guys, both of those PDFs are outstanding. Joel, let's see if tails work. Everything said down. We didn't reach the one-to-ones. There's a tail, and it bounced right off resistance inside of favorable large triggers. Smalls below the large, didn't reach the trouble spot. Circle a tail. There was your resistance right at the triggers. It pushed up a little higher, but you were okay. Kind of rangy, rangy, rangy. 50-50 off a good bottom. What did it do? No divergence, right back to the area inside of favorable large triggers. Egads and little fishes. That's it, guys. That's what we do. That's what I teach every day. Isn't that amazing? That I didn't have to go back to pictures that I took last year to go, ooh, let me try to convince them that this shit works. Pardon my French. Didn't mean to swear. All I had to do was scroll back an hour and 10 minutes to the S&P, and that was the easiest winner that you could ever take. No divergence, strong triggers, tiny window of opportunity. How long does it take to build trust in it? That's the real question, isn't it? How many repetitions do you need before you stop second guessing yourself? How many repetitions do you need until you're so comfortable that you never miss that entry? Guys, that is the million-dollar question. I'm going to give you the absolutely free answer. I would say if you fill up all the way down to 91 with rules met trades, pictures of rules met trades with the rules written on the pictures, and you fill it all the way up to 91, I'm going to say you're going to have a pretty good idea and no doubts in your mind that the methodology works. And then if you fill up the second row and double that to 182 pictures, you're going to get to the point to where you can read your charts in a matter of seconds. Fill it up again, another 91. And wild horses couldn't drag you from taking the trade. Do you guys know what most people don't do? They don't work. Most people want to be day traders because they pay for software. They feel entitled. Most people believe that because they lease the software, they should be experts at it. Trading takes work, guys. It really does. It's $1 million a year job, and it takes work. Your college degree took 4 years, right? I'm not saying that this will take you 4 years, but there's an easy way and there's a hard way. I excelled at the hard way. The hard way was to, at all costs, avoid posting in the room because it's embarrassing. Because what if I'm wrong? Mark's going to call me on my private line and berate me, I'm sure, because that's what he does. I didn't use the spreadsheet. I refused to take pictures because I was too damn smart. I'm going to remember what I see. Didn't participate in class, didn't simulate, guys. I was separated from money so fast it made my head spin. You can get to where you want to be, guys. We learned the rules. All you had to do was raise your hand if you had a question about them. You can simulate every day, post picture. The only way I can't give you feedback is if you refuse to post, right? Yeah, I'm not in the business of begging people to participate in their own education. You can simplify. You can have a plan that optimizes your chances of success, or even better, Mark can just give you one. You can choose whether or not to follow it. After class, you can go do market replay or not. It's totally up to you. You know what's kind of cool, though, is you can take pictures from market replay and bring them to the class and discuss everything that you did in your private study time with me in the room, and I'm glad to do it. You can go back and retrade the day. You can fix your mistakes. Did you miss a trade that you should have taken? Did you take a trade that you shouldn't have taken? Did you fudge your management because you got nervous? Go back and fix it, guys. Take pictures of the correct trades. Fill that spreadsheet. Do it every day until you take the correct trades. That's when you go to one of those Apex accounts. That's where you test your plan up against one of those prop firms. It doesn't do any good to keep blowing out Apex accounts before you're comfortable with the rules. It doesn't, guys. I know you're like, oh, I'm going to get rich. Yeah, probably not. Not without the work. Blowing out Apex accounts when you're not consistent on Simulator is ridiculous. It's a waste of money, guys. It really is. And if you focus those efforts on Simulator and getting the muscle repetition in, life gets pretty easy. Trade a 2 lot. That's crazy talk, Gary. How can I be rich if I don't trade a 10 lot? Isn't it my desire for money that creates wealth? Or is it just taking the damn trades? Get on base. Moneyball. Amen. I love that movie. I'm going to watch that movie today. Go watch Moneyball, guys. Brad Pitt. Your wife will appreciate it. Great movie. Go ahead and watch Last Samurai too. Too Many Mind. Those are 2 lessons to take into the weekend. Up 850 on the NASDAQ. Great job, Gary. PFI, don't start with me. I'll kick you out of the room. Cowboy hat. Look at you tugging my heartstrings. I'm all talk. Termination for the win. Kind of cool. Guys, we're going to call it a Friday early if nobody's got anything. Last loser for the day. It looked good, didn't it? Gosh, David. I'm not gonna lie, David. These are the days that test you, man. These are the days that test you. Can I tell you that your execution has been flawless, though? With the exception, excuse me, of the smashing through on that one, and even then it was good. Your execution has been flawless. Um, and I know it's frustrating when it doesn't work. So, David, your job on the S&P this afternoon, should you choose to do it, totally up to you. This is what I do when I have a day. And maybe you guys don't want to do it, but I will. As I start going through and I start looking, that wasn't a 50-50 for us. This one probably was. And I just start kind of circling tails and just looking. Did I miss anything? You do the replay? And I think that this is just as effective, David, at least initially, is scroll back and look for those tails, right? Scroll back and look for those pullbacks, and get an idea to see just what was available on the day. And I'm not going to lie, on the S&P, there was not a ton. I think we were all asleep when that one set up. But the S&P wasn't a huge giver today. It really wasn't. Maybe this little guy right here. And even that's 50-50. What time was that? 9:30? So maybe not even with the divergences. Um, this is great if you're ever having a day where you're like, son of a gun, and you just go back and check it. You're like, oh yeah, no, I'm pretty much on base today. Um, I'm doing a great job following my rules today. Yeah, I didn't hit my goal today, but the reality is there's going to be another day um, where it just exceeds your goal, where it's like an ATM. I love days like that, right? Do you watch crude oil as well, David? I think crude oil had some opportunities today. So crude oil might have been where you made your money today. And the S&P just kind of kept you on your toes. The hardest days, yeah, and that's okay. But go to sim, don't stop, right? Like if you have time, go to sim. It's okay. They just keep flirting with it. Good looking continuation. Of course you're winning on simulation. The key is taking it. You got a lot of medium probability trades today that didn't work out. Um, Two of them were outstanding. One of them was a little iffy, but you executed flawlessly. So, um, man, some days are great. What is today? Today's Friday. The guys that get in the market and move it are already on their yachts. Crude oil volume is split today, right? Sometimes there's challenges with that. Um, I'm not making excuses for the market. It's just some days you're the boot and some days you're the butt, guys. Consistency is the key. And I think that you are consistent. I think you've done a great job. I think there's been a lot of opportunities. Not all of them have been perfect. Three divergences in the same price range has me second guessing this odds favorable and a clear path, doesn't it? One, two, three. Super Markio. Go get into some trouble. Call me if you need bail in the money. I got you. Guys, it's been a good week. There's been a lot of good lessons today. There's been a lot of opportunities in the market. I think there's been a lot of money made this week. Three divergences for the win once again. Does everybody see it? The market gives lessons over and over. The market does exactly what we talk about in the first hour over and over. You just have to get to the point to where you recognize what's happening in the moment instead of 3 minutes after the moment. And that's where repetition comes in, guys. That's where taking a lot of pictures comes in. Um, the average user in the beginning thinks that they had a long here and they weren't sure, and then they think that they had a long here and they weren't sure, and then three divergences print and they're like, oh yeah, that's a long. And then they get run over and they're wondering because they won't post in class, well, how come I just got run over? Um, Post your trades, get your feedback, guys. Three types of pictures to take. There are pre-trades. If you get in the habit of taking pre-trade pictures, looking at it, and with the market not going up and down, are my rules met? Pre-trade pictures are awesome. There's a lot of information. Taking picture right at the entry. All right, it came and it got me. Everything's working out the way I want. You can go back and make sure that your entry was in the right place. And then, guys, I snap pictures the whole time. Like when I'm in a trade, I will literally take pictures. I may have deleted mine. Um, just to give you an idea, when I'm in a trade, I started the trade here, I think. And then it went up, and I managed. I took a management picture, a management picture, a management picture, a management picture, and I take all these pictures over and over from start to finish, and then I go back and look at them. What's the middle picture tell me? It tells me that I took a short that didn't work, and I tried it again and got out break even, and then I went with the flow, and I took profits at a trouble area, and I'm looking for a bigger run on this one potentially. So I'm not willing to risk anything, but everything says up. And guys, this is a middle of the trade picture. I can come back and make sure I didn't miss something. Like in the moment is cool. Going back and looking at it is amazing because I'm not emotional after the fact. There's no adrenaline after the fact. I'm very, very if then after the fact. That's why I can look at your charts and tell you exactly what's going on. I can look at your charts and usually tell you exactly what you are feeling. because I was feeling the exact same thing at one point. You'll get to the point to where you're not nervous in trades. You'll get to the point to where you're very comfortable, where you're very confident. You'll get to the point where they have to come get your stop. You won't just lay it out there for them. And you'll get to the point to where you'll start recognizing patterns that maybe aren't high probability trend trade patterns. And guys, it's just a progression. Take advantage of the fact that there's live feedback 15 hours every week. Take advantage of that. Don't worry about posting too much. Don't worry about asking too many questions. Be very, very selfish with your time in this classroom because you're looking at it right now. I have been running my mouth for 25 minutes about nothing. Guys, the last 25 minutes could have been your private session on the subject that you wanted to talk about. The last 25 minutes could have been Bobby T's working on termination conditions. It could have been Pineski's. How do I get the most out of the trade when it's moving really, really rapidly? It could have been Alinsky's. Could have been C-Dubs. C-Dub, this could have been yours. Chris L. All I need is for you to ask. Had some great questions this week, guys. We've had some great conversations outside of what I normally talk about. You don't have to. There's no obligations. No obligations, but I sure wish you would. I'm going to go mic silence, guys. If we don't get anything out of our mouths in the next 5 minutes, we're going to shut it down and go have a great weekend. So if you have a question, pop it in the room. I'm going to shut down the YouTube video.